Hi dear traders, investor sentiment has finally improved, which had positive influence on the financial markets. Some macroeconomic data from the US suggests that the Fed may slow down the pace of monetary tightening. Thus, US average earnings grew slower than expected, which means that consumer inflation is unlikely to accelerate. This may encourage the regulator to take some measures to stimulate the US economy, which is a positive factor for US stocks, but a bearish factor for the US dollar. Let's talk about the results of the previous trading week. The US dollar depreciated slightly on expectations that the US Federal Reserve may slow down the rate hiking cycle. The US dollar index, which demonstrates its value against the basket of 6 major currencies, closed the first week of the year at the levels where it started, that at 104. The greenback failed to maintain the bullish momentum and the monthly high it reached on Thursday. The data from the US Labor Department pushed the US dollar down by 160 pips. Meanwhile, the euro-dollar pair managed to reverse and broke through 1.0650. Apart from the Fed's decision on the rate, the euro traders took into account the inflation data in the eurozone. The consumer price index showed that prices slowed down to the lowest level in 4 months, yet the reading is still high and unlikely to change the monetary policy of the European Central Bank. The regulator will most probably continue to raise the rate at a previous pace. The British pound also returned to its previous trading range between 1.20 and 1.21, although the Bank of England officials are discussing the possibility of ending the tightening cycle. They are trying to avoid a recession in the UK economy. In addition, thanks to unusually warm weather in Europe, gas contracts in the UK are holding at their lowest levels last seen in June, which has significantly eased inflationary expectations. In the meantime, the Japanese yen continues to recover. In the past trading week, it was holding near its highest level in 7 months, that is at 132 yen per dollar. Speculations persist that the Bank of Japan may soon abandon its ultra-loose monetary policy. This is confirmed by regulators' decision to raise the cap on 10-year government bond yields from 0.25% to 0.50. As for gold, it seems to be in high demand among investors. The quotes advanced to the level of $1,870 per troy ounce. The fresh data from the US labor market is likely to affect the demand for government bonds, which is favorable for gold. Therefore, the precious metal is set to appreciate further. In the oil market, BRENT could not take advantage of a weaker US dollar and stayed under pressure. The asset closed last week with a decline of 9% at $78 per barrel. Oil is losing ground amid fears of a global recession due to the worsening situation around COVID in China, the largest oil importer. India also expects an economic downturn amid slow demand recovery. These are the trends of the last trading week. What events will influence market sentiment during the new trading week? You will, as usual, learn that from our daily news reports. Also, don't miss our weekly review, which is due tomorrow. Subscribe to our channel and see you soon.